And a subtle thing I've noticed with some clients is that from when we maybe got them, I don't know, 6, 7 years ago, it was their high-ranking exec at a bank or a PE firm. They're talking about acquire, scale, launch, exit. And then now they're a bit older, so maybe semi-retired. It's more the family, legacy, the next generation.
Yeah.
So Adrian, you touched on coordinating these pieces. How have we maximized that as a business for our clients to give optimal results?
I think it goes back to that point. It's literally, we've got a great document, we follow clients, a needs analysis that literally takes your balance sheet and stress tests it. And we always, it's not a nice way to say it, but we kind of kill you on paper and say, what happens from day one? What are the steps, literally, to the process of probate, all of that. So I think once you cover those areas and you look at all those, you mentioned the blind spots, and you say to them, these are the key areas, and how can we make it better? How can we add value? I think that's the key thing. It's not about stifling or creating fear or anything like that. It's just pinpointing key areas to say that if we slightly adjust and look at things more practically, it's just going to make yours and your family's life
a lot easier.
So much easier and better.
Yeah. And just to that point, I mean, I think when we talk about structures for clients, I think everybody, or most clients or most business owners or entrepreneurs, are always thinking that you have to have this lumpy asset or this big asset in place for you to start thinking about structuring mechanisms of how you lay a foundation for your assets and your investments. You could be starting out a brand new business, you can structure it there, so it's less onerous from a tax perspective. Yes, there might be costs in terms of setting up, what you need to set up depending on what the structure is. But the conversations at least need to be started even with the company or the business being in its infancy. So it doesn't have to be a big value attached to a business for you to start thinking about a foundation or some structure around a business, which I think is quite important.
No, definitely. And I think let's move the conversation forward to how we empower some of our clients as a differentiator, the human side of wealth. I think Vanguard recently came out with a stat that the total perceived value when it comes to clients, etc., 45% of that is equated to emotion. The other 55 is based on your financial planning, your investments. So what do you think the reason is that in our industry most advisors overlook the emotional and psychological aspect of wealth management?
I think the one side, and unfortunately this is, I guess, the one thing that I think the industry has, which is not great and a great look for advisors, is that I think there's an economic benefit behind as well, where I guess people are just looking at, okay, how do I earn off of the advice that I'm providing? And there's also a case of guys actually not necessarily, they don't really care that much. It's more about what monetary value can I achieve out of this sort of transaction, So I think that's the other side of it, So, just having those sort of, just the care, I suppose, just making sure that you want to provide advice that is, that is good, that is, I guess, advice that, is going to be useful to a client and their needs, not necessarily translating into some sort of monetary value. I think, that's one thing, I guess, so that I think the industry struggles with, depending on who you're speaking to. So I think there's always an economic benefit behind some of the advice. Some of it might not be prudent advice just because there's that. But yeah, I think it's just having honest conversations around, what clients actually have at their disposal, and making sure you actually care about the outcomes after that.
And I think further to that, I think we focus on a word we always say with clients. A lot of the advice, how many times have you had an advisor was it changed it because it becomes something that's transactional?
Yeah.
You set up a policy or do something and you might speak to them once a year or whichever, and you get a dreaded call and you think, oh, geez, this guy's trying to sell me something else. He's going to give me something else.
Give me another R8.
Exactly. And we've heard that many times. And I think it comes down to the fact that You need to create a relationship. People underestimate the importance of a relationship manager, not an advisor. I think a relationship manager is there to manage all parts of it. And sometimes you're going to have very difficult conversations with clients.
Yeah.
I think we've learned in our experience, the best relationships we build are during the toughest times.
Yeah.
COVID, 22, when the market downturn, that's when you really need to engage with your clients the most, because that's when they need you to be there to give them peace of mind. You mentioned, you know, how many times you've also sat with a client, they can be the smartest person, very analytical, but when you go through it, they'll say, I feel this is the right move for me.
Yeah.
Because you've created that certainty for them that they understand this person genuinely has my interests, they've looked at all the aspects, and I believe they've given me the best advice.
Yeah.
And we always talk about that intangible, we're building a service-led business. It's not something that's transactional. And I think to Ray's point, that's what the industry unfortunately has got this sort of, how do I say, reputation. You know, I think for us starting our business, we wanted to go out and say to guys, we are different and this is how we differentiate. And it's something a lot more sustainable, and we've experienced it. We've had clients for 10, 15 years, which I think is testament to it.
Yeah.
Yeah. No, and I think another reason is that, you know, the emotional side of what we do as, you know, in our industry is it's uncomfortable.
Yeah.
You know, guys don't know how to address grief, ego, family tensions, looming mortality. So I think it becomes, everyone would rather just talk about asset allocation and returns because you can measure it on a spreadsheet.
Yeah.
But where you're going to put anxiety of a spouse whose husband just passed away and she doesn't know.
Yeah.
You can't measure that. And I think that's one of our key things. You know, we talk about connection as one of our driving principles in our business. And I think that's where it goes beyond the financial connection. It's the human connection that really, you know, enables us to build those long-lasting relationships with our clients.
Yeah.
And, you know, even having said that, I mean, we talked about, you know, clients worrying and anxiety. What are some of the unspoken fears or pressures or questions that some of our high net worth clients, or even just clients in general, have or you've come across?
I think the thing that we come across, it's funny enough, a lot of our clients are getting to that phase you mentioned earlier that are looking to retire. I think you spent your whole life accumulating wealth, but I don't think that's you're so used to receiving an income, and you've got the certainty of an income coming in. And the dawn hits when you retire that now I'm going to have to start drawing on these assets, and is it enough? How do I do it? What is the principle, the process? Because I think in theory it sounded great, but now the practicality is really coming into play.
Yeah.
So I think back to what we said is that we run these simulations to show the client, this is how we recommend you draw on these assets and how to do it. And I think clients could be worth 200, 300, whatever, 400 million, but it still remains the fact they're like, if I need X per month, can I actually still do it?
Yeah.
And that's the mindset, to your point. It's the psychology of saying, I have enough, I can draw, I can live well, and it can sustain me for however many years.
Yeah.
So I think it's just, to your point, is providing that level of certainty, irrespective of your wealth, whether you're high net worth or anything like that. By doing these planning exercises and giving those foundations, it kind of gives you a direction of where you are now and where you want to be. And ultimately, what assets do you draw on and manage first? You know, that's also just as important, because you probably have more than enough, but more technical questions come in, and then between spouses and kids, because that might be another expense. These are all other questions. So I think to your point, the anxiety that I think we've come across more and more is that clients are saying, well, now I'm retiring, practically what does it look like?
Yeah.
And that's a worry.
It hits home. And I think there's always a need for context. You know, I think clients have worked they've worked in their working life for probably 20, 30 years. And when you get to retirement, all of a sudden, and this happens, it's a natural, I suppose, I don't want to say natural progression of things, but I think people just leave it up until, I guess, the time they need to worry about it or start thinking about it. Like a pension, you know, like you contribute to a pension and it's only 8.55 and you're getting to retirement, they just start thinking, okay, so what do I actually have and what can I do with it? So I think, you know, guys like us, and obviously being in the industry, it's all about providing the context, which I guess is some sort of hand holding for clients to say, emotionally, you are okay, or you're not okay, but these are the provisions or things you can look at in terms of options. You know, from what Adrian was saying, you know, so from a it's not just a case of taking money out of an RA or retiring out of a pension. You know, what are the tax implications? How much do you actually need per year? Could you take a bit there from your pension and maybe a bit from savings, and maybe what is the most tax efficient way? So it's, for us, our job is to provide the hand holding to say, let's put everything into context. To Adrian's point, we run the numbers, look at a complete 360 view of what you've got in place, make it as efficient as possible when you start taking an income, and I guess make it make sense. You know, so you accumulating all these different policies and different things in your working life. Some of them have become obsolete. You know, you've got a policy that you're paying 7,000 rand a month, and you've got life cover of 200,000 rand.
Yeah.
You're thinking, okay, where does that come in? You know, so I think for us that's the job, right? You know, to say, okay, so this doesn't make sense anymore. Let's leave this. Let's make it make sense, but let's try to consolidate a little bit as well, you know, so that it's not confusing. You spent your life building and look, accumulating all this wealth and all these assets. It's time to try and simplify life and consolidate where possible.
Yeah.
You touched on consolidation. Let's speak to the offshore context, because most of our clients who, in the accumulation phase, they have a portfolio sitting in Jersey. They have a house, or you know, they have assets across various jurisdictions.
Yeah.
You know, let's touch on how, when they reach that stage in life where they're looking to consolidate and bring everything together, how have we had these conversations with some of our clients and help them achieve that?
Yeah. Yes, again, it all depends on, I guess, you know, where the person is intending to retire, for example, you know, what sort of, that speaks to then the solutions that you can start looking at for clients. The intention of some of these assets, you know, is it just property providing an income? Is it an investment property? Is it something that they actually use and spend time in this property, and it's, I guess, you know, an asset that's required within the family, not necessarily for profit. So these are all the different assets that we look at for clients. But again, to my point, it's all about trying to see how best to consolidate some of them. If it's a share portfolio that's sitting in Jersey, for example, and you've got other assets and investments, again, in your personal name that are domiciled wherever, in whatever jurisdiction, but they're liquid assets that you can look at perhaps a structure for, to try and consolidate that in some form of structure for, then do that. Or maybe bring it all under one roof so that, you know, you can efficiently manage that. But again, it boils down to what is the investment itself intended for? Is it to provide an income in retirement? Was it just a nice to have at the time that you set it up? Is there some way, is it profitable if it's an investment? If it's not, how can we try and make it as profitable as possible? Maybe let go of it. You know, I mean, that's the emotional bit, you know. So I think clients, there's some things they know, but I think they want somebody else to tell them okay, maybe here, you know, this doesn't make sense.
Yeah.
So I think having that sounding board is important. And that's why it's fundamental for guys like ourselves in the industry to have the honest conversations with clients, because you might be savvy and very much good at in your specific industry, good at what you do, but again, if you're not exposed to some of these things from a tax perspective, from a structuring perspective, it's always good to speak to an advisor who can guide you with that.
And I think the overarching theme or the underlying reason is less financial solutions, but actually emotionally driven.
Yeah.
I think, I mean, Adrian, I'll pivot to you now. I think we've touched on a few clients who have had some emotional questions that have prompted them to do something. For example, you know, a client saying, my wife is asking if he dies tomorrow, can she do a woolly shop?
Yeah.
You know, something as, so that decision, I mean, you can touch on, you know, just expand on that a bit, but that decision, it's a financial decision, but it's driven by emotion. It was brought about by emotion. So that's where the tangible, or, you know, addressing emotional questions actually is where the real value lies. And clients have been telling us this for years, but we just haven't maybe listened in our industry.
Yeah, and I think to your point, it goes back to, I think there's a different life cycles of planning. I think we going through that transition now. A lot of our clients have accumulated wealth and they've done well for themselves. They've diversified. I mean, you can attest to it. I mean, we've seen guys got their balance sheets and numbers down to a T. But the crazy thing about that, you're so hyper pedantic about the plan, but you actually haven't communicated it to anyone. Yeah. to your point, and your spouse comes, or your wife, or whoever comes and says, well, what is actually there? What is in place? Who do I speak to if something happens?
Yeah.
Who's the contact?
Yeah.
And to your point, that prompts these discussions. So you've done all of that now, but then, as Ray alluded to, then you go to the point of saying, well, what are the areas? How do we simplify that? Maybe have I got too much? Do I sell off? Do I consolidate? Do I manage it all? But we encourage, and I think you've noticed that, a lot of time having your spouse in the conversation from the beginning, they can actually feel that confidence knowing that they know exactly what's in place. What do we do? Who do we speak to? What is the process involved? Because again, if something, God forbid, should happen, it's a very emotional time. And it can happen suddenly, which can make it worse. There's kids involved in different parts of the world. I mean, all this complexity comes in. If you've done your work now and you've simplified it, it's very easy. Everyone's aware of the situation, and then it becomes much better to manage considering how difficult it might be. So I think the key thing is that, again, go back to the point of the communication and getting everyone involved from the beginning part so you avoid any conflict or issue down the line.
Yeah. And just to close off, I mean, when clients feel truly supported, from a structural point of view, structurally organized, we've set up these structures for them, they know where everything is. What does peace of mind actually look like for them, and how is that connected to their families in terms of estate planning, succession planning, etc.?
Yeah.
I mean, if I could say, the sad part of it is that we've put all these things in place, and Kenny, we've had clients, unfortunately, that have passed away in very sudden circumstances, and it's been very close. It's been emotionally damaging, and what we've put in place and the reason we put in place, it worked exactly. So the practical input of it has played out exactly how we envisaged, God forbid, if something should happen. And I think once that happens and you're there, to your point, in supporting the family on the back end consistently from the beginning to the end to the transition, I think that builds a level of relationship that's very hard to beat.
Yeah.
Because during the toughest time, you were there to show that. And it's just as I mentioned, in the market conditions, whatever, that's how I really feel the tangible relationships will not only be built but sustained. So, I mean, we've been through it, we've experienced it, and I think it's also, when that something happens, we've built the relationships with these people. There's a genuine care there.
Yeah.
We have a fiduciary obligation to our clients, considering they've built up 30, 40 years of their wealth and they've given it to us. I think you cannot discount the fact how important it is.
Yeah.
And I think that's something we've all, myself, Ray, yourself, that we take extremely serious. And I think clients can appreciate it.
Yeah. And I guess, just to add to that, a lot of clients, I guess you want to get to that point where they trust you explicitly with their everything, right? So, if there's an issue with anything concerning finances, you're their go-to. And I think that's the sort of relationship or relationships that we're building with clients where, whatever happens within their sort of setup, we're the first port of call to say, what does this mean? What impact does this have in the overall plan? And again, so it's small little things, it doesn't always have to be, you don't have to always be doing something for your clients for some sort of financial outcome or benefit. It's the small sort of like intangible things that you do for clients, just making sure that the relationship is present. And I think that's quite important. So I think to Adrian's point, spot on, it's the relationship and making sure that their clients understand the structure and the solutions they have, but also just revisiting that and having the conversation. I don't know how many times I've had conversations or review meetings with clients where we're looking at their setup, where we pretty much go through everything again, the seventh time, because again, this is not stuff they're exposed to every day, but we are. So I think it's always important to have, firstly, consistent conversations, be it quarterly, be it whatever, just so at least they're aware of what they've got and what would happen if if there's a scenario that presents itself that affects the setup. But also just making sure that you reiterate the benefits of some of the structures and solutions they have in place, because that will always play in their minds if something does happen. So
I suppose peace of mind is not the absence of problems, it's the presence of order. You put things in place so that when things do go wrong, there's no need to panic.
Correct.
Kind of like a dinner host enjoying their own dinner party instead of running around trying to defend things and make sure everything works together.
Yeah. And I think it's also important, I mean, with ourselves being an independent firm, you know, we can call upon any sort of resource that we can utilize. We're not tax experts, we're not asset managers. To Adrian's point, we are relationship managers. Yes, financial advisors, but more relationship managers. So I think we've got a specific skill set, but we've got people around us that we can utilize as resources, be it a client has got a tax issue, a client has got a corporate structuring issue that they're looking at, a client wants to sell their business, they want to value it, be it from a risk management perspective, life cover, etc. You know, so these are areas that all form part of a structure and planning, but again, it's always important to make sure that you've got all these resources and the structure works. And for us, like I said, we can call upon all these different resources to make sure that everything is sort of working cohesively and making sure the plan does actually result as it should.
Yeah. No, thank you, gents. Appreciate the time. Some valuable insights learned. And thank you for joining us for these Arck Wealth conversations. I hope you found it insightful and, you know, to give you a different perspective on how to think about wealth, strategy, structuring, planning. And for more insights, do find us online at arck.group. Until next time, thank you.